we've got with us Sanjay Kumar. He's the MD at IGL, joining in to talk a little bit about their quarterly performance, why the EBITDA has missed street estimates, and what the outlook is on their volume growth. Good to have you on board, Mr. Kumar. Given the sharp drop in global gas prices, the Kirit Parikh committee as well being implemented, what is your outlook on the gas count coming down?
So for the Q1, the gas cost will definitely come down. Last quarter, our gas cost was about 37.5 rupees per meter cube. And we expect that to come down by at least 20 to 25% because of the reduction in APM price, as well as reduction in the other domestic gas, as well as RLNG that we are sourcing from the market.
Sure. So how should one look at the EBITDA versus SCM for FY24?
So for FY24, we are looking at EBITDA between 7.5 to 8 rupees per SCM. For the last financial year, our EBITDA was 6.91 rupees per SCM, which was a bit lower, 6% lower as compared to the EBITDA per SCM for the year 21-22. But for the year 23-24, we expect it to be in the range of 7.5 to 8 rupees per SCM.
So on a sequential basis, volume growth stood at about 2%. Which segments have contributed to this?
So the CNG sale, quarter to quarter, CNG sale was, slightly higher. PNG sale could not pick up. We are working on the same. We have rationalized the pricing in the first week of April. And we are very sure that will have impact on the financials for this quarter as well as the financial year, which is presently going on.
Right, and given that your industrial segment volumes have been a bit stagnant around 1 MMSCMD, what is the outlook? What kind of volume scope do you see?
So industrial segment is actually competing with LPG as well as fuel oil in many places, and some other, unconventional fuel or the other, sources that they are using, including biomass nowadays, is being used as fuel in the industries. And we expect the growth to come now because the prices have, rationalized. Earlier, the prices were in the range of 70 rupees or something like that per SCM. And now we will be reducing the price further as the world market prices are going down.
Right. So with the development of the newer geographical areas, what is your volume growth guidance then for the fiscal?
So we will definitely, grow by 200 to 300% in new GAs. By new GAs, I mean Ajmer, Kanpur, Muzaffarnagar, and Banda also. So we are expecting the volume to triple actually in these places, at least triple. And the reason being that major arterial steel pipelines are being commissioned in these areas, which will help us in growing the sale of CNG as well as PNG there.
And on an overall level, what would be the volume guidance for FY24 then?
So for the company, for this last financial year, we had volume of 8.1 million. For the financial year 24, we expect the volume to be 8.5 to 9 million cubic meter per day. The reason being, what I just now informed you about the steel pipelines that are being commissioned in our some of the new geographical areas, which will help the volume to grow.
And what is the outlook on CNG vehicle additions in Q4, given the sharp cut in gas prices that we saw? Has the vehicle conversion rate improved?
So vehicle conversion rate has improved now after the year ended. During the financial year 22-23, the vehicle conversion rate was continuing towards the last quarter at around 14 to 15,000 vehicles per month. We expect that to pick up and go to about 18,000 to 20,000 vehicles now because CNG prices have now normalized.
In FY23, you announced a higher dividend compared to previous year. How should investors look at this going forward?
This was a one-time dividend actually because we entered 25th year. This is our 25th year, which will be ending in December 2023. And that is why to celebrate the 25th year of the company, we had paid that special dividend. We don't foresee that to be a normal, an every year phenomenon.
All right. Appreciate your time. Thank you so much for joining in, Mr. Kumar, and giving us a view on IGL. So as of now, they are working on improving their PNG sales. They're seeing volumes for FY24 at close to 8.5 to 8.9 MMS CMD and still scouting for acquisitions.